Welcome into the Crypto Bunker podcast. And we're looking at an Ethereum long-term chart. And as you can see, once we zoom out on the Ethereum chart, we are less likely to have, anxieties. Um, and it's possible that we could come down and touch this level still. It's possible that we could break through it and still come lower because there are a lot of risks out there right now in the market, especially with the recession that we are now officially in in terms of America. America is now officially in a recession, and so we're at that point where the consumer is really getting crushed. And we are going to see, we're going to see if Ethereum and Bitcoin can act as gold acts during a recession. Now, if we zoom in here, we are looking at a very key level for Ethereum that we have broken through. And we obviously lost that level here about a month ago. And I think I talked about that on my previous video, that we were looking at definitely losing that level. I did get bearish at the wrong time. I think actually it may have even been, yeah, it was here, I think, when I was saying that we would lose that level. And then we have reclaimed it. As you can see, we have many touch points on this level. And it's basically, if we can break above this, we're looking at, even if you look at this, we may have just broken through very key resistance. If you look at this top and then you draw it through, we even touch it here, which is a key level there. We touch it here, here, and then we're sort of breaking through. So are we breaking out of a massive wedge here that could see us really kind of let loose into a bull run? And it's definitely possible. I'm not ruling it out at all. Is it possible that we can run like we did there previously? That would take us to around 65,000 on Ethereum. Crazier things have happened, especially if this is a left translated cycle, which it very well could end up being that. For Ethereum, we're basically around here in the cycle, in the previous cycle, if you look at the chart. But it's possible that we've already ran through this part of the cycle here and that we are now just ramping up. Ethereum, last time it obviously created a wedge here that sort of tested there and then ran. If you look at, from the bottom to top of that cycle, it was definitely more than that one. So we could be looking at this one obviously looks like it would take us to 385,000 on Ethereum. I feel like with Ethereum, not enough people talk about the like long-term target of Ethereum. I do believe that we can hit 60,000. If that's only $6 trillion. I mean, if you think that every bank and institution and wealth management will have their own blockchain, and Ethereum will be the sort of hub of those blockchains, where a lot of them become layer twos, or they are transacting within the Ethereum ecosystem, which if they have a blockchain, they certainly will be interacting with the Ethereum blockchain at some point. So, JP Morgan, obviously they have a blockchain. There's other people working on their own. We have Ernst and Young who, built, I think it's called Nightfall, using Polygon. It's like a ZK um, type of thing. We have with zero knowledge proofs and with all these things that are happening within the Ethereum ecosystem where you're going to be able to have privacy on chain, that's going to be a key thing for companies to adopt if they want if they want access to people's capital, they're going to need to put in, privacy basically. So I think that's going to be a huge thing, especially in the world of AI. But at the end of the day, yeah, like this, if we hit the top of this line that I drew, we could be looking at around like 40,000, something like that. I think more realistically is probably more like, 20,000 or something like that. But, I was thinking about it, and it's more important actually to accumulate assets like this in bear markets before it runs up rather than thinking about, oh, I'm going to sell at this price. You actually want to accumulate them when you can, because they will never come back to those levels on a logarithmic trend. It's similar to like something like gold or silver, which, you accumulate in a bear market, which we can talk about those assets as well coming up. But you don't really want to think about what the price up here is going to be. If you're accumulating long term and you're not really thinking about selling because you know that, we're just so early in this asset class, that you may actually end up never getting this level again. That's the thing that's so hard, is that we could run here, we could come back to, around 10,000 or something, down in this range maybe, that like 8,000, 9,000, something like that. You know, so it's vital that you don't really think about selling, and you're more just accumulating assets that you think are undervalued, you think you're early to. Um, if we look at silver, silver is forming a wedge here that I just think looks so bullish. It's one of the most bullish charts really in the world. If you look at long term, this is a cup and handle, and usually a cup and handle will perform like this. So, it's the target for that is like crazy. It's like 300 or something. But, yeah, let me just look at this thing on a long-term time frame, even if you look at like a 3-month chart or something like that. To me, it looks so bullish. I do want to put the moving average ribbons on and look at Ethereum again, but if we look at this and we remove the drawings, we do have a bullish cross here on the 3-month for silver, and we're getting support off of that 3-month. So even if we look at like reversal indicators here, we didn't put one in there. We obviously did put one in 2020, which is rare for silver. And if you look at the last time we had a reversal candle, we had down here, we were at $3 and we ran all the way to 50. So here we're at, 12. Can we run to, 100? I think we can. My target is more like $60 to $80 range. I think we will break the all-time high. We may stop at the all-time high and consolidate, but that's another case to be made of why you shouldn't actually be thinking about selling physical silver. You should more be thinking about, I probably will never be able to accumulate at this level again. I mean, obviously with silver, as you can see, every bear market bottom was higher, right? So if we look through past to this bear market, and we sort of look back and say, okay, We see that it hit $1.30, then it hit $3.33, then it hit $4, then it hit $8.50, then it hit 13 or 12. So you're almost tripling the bottom every time, right? So that would mean that the next bottom would be maybe around $30 to $40. And so, I just think, again, I think this is just a huge wedge that you could even draw it like that, and you could take it and it would take you up to, again, like 270, something like that. I mean, in all reality, that should be happening. Silver is a very manipulated asset, especially since 2020. I think that they have manipulated it way more than in the past. Um, if you think about everything that happened within these 3 years, with the green energy movement, with COVID, with all of the reasons that you would want to buy silver, essentially technological revolution, it's used in so many things. It's and not only that, but it really has become money for a lot of people. A lot of people rely on silver as their store of value, including myself, store of wealth. I don't rely on gold. I rely on silver as my store of wealth. Silver is money to me. Now, if we look at this on a weekly time frame, let's take out the indicators. We'll put in the moving averages again. On a weekly time frame, we have had a lot of sort of messy action here. When you want to be long an asset is really, as you can see, you want to be accumulating when the moving averages are short in between, okay? So, and you want to be selling when the moving averages are wide, okay? And they're in order. So we have the 20, 100, 150, 200. As you can see, this silver ran even before we crossed bullish on the weekly when we had them all in order. And it was actually already sold off by the time that came through, but you're always going to have another chance. And as you can see, this is the widest they got. And we're pretty much at the all-time high or, recent high of like 28 to 30. So if we look at that now, we can see that we're really squeezing and it's even tighter than it was here. If we look, similarly, I guess in like 08 time frame, it was very skinny as well, but it wasn't even really that tight before either. So we have a lot of different examples. We have here, and this little thing here. So really what I'm seeing is an opportunity to buy. And yeah, I do want to emphasize that, with silver, obviously none of this is financial advice on any asset that I talk about, but it's just that, again, we have to talk about the long-term implications. You probably will not be able to accumulate a long-term store of wealth like silver at these levels ever again. At least traditionally, that is, I mean, that may be wrong, because silver is wicked. As you can see, we did come back to, 13 in the bear market, which obviously previously was at the same level. So maybe, if you compare, this price action to this price action, which I sort of do, maybe we do come back since we came back to the middle of that range there. Maybe we do come back to the middle of this range in the next bear as well. So maybe we are at that level where we do come back and, we break up and we come back and we do that. And then we kind of break down and we do actually come back and test this level on the next bear. That's certainly possible for silver. But at the same time, nothing is guaranteed. A lot of people actually see this as a potential super cycle. for silver. So it's like a, the cup and handle idea is actually different than these previous cycles. Okay. So if we came up and we did this and we went directly there, we broke back down real quick and we actually tested like around this level again. Then we came back up and we actually did do the super cycle. So that's possible. And in that scenario, we may not come back down to that level. We may actually only come back down to 50. If we looked at it on like a long-term range, that actually does kind of line up there, right? So, if we're looking at something like that with a super cycle, it's very possible that we just will not be able to buy these levels again. So you have to keep that in mind as a long-term holder. In terms of physical silver, I like to buy junk silver because I feel like that's the least likely that I'm actually going to sell. I look at it as like a long-term savings. Junk silver is just American currency from the pre-1965 coinage, and also American silver eagles, which are also American currency. This is a long-term store of wealth because historically governments have confiscated silver and gold bullion, but they cannot confiscate currency. And so this is just another reason. And junk silver right now is relatively cheap in terms of a premium. So you can get junk silver for like 27 an ounce or so, which right now, the premiums, you can get bullion for like 25, 26. So it's pretty reasonable. Usually the premiums are, at least like the past couple of years, actually have been higher on junk silver than they are right now. So this could be an opportunity. Now, let's talk about speculation in the silver market. I'll give you a few stocks that I like, not financial advice, but these patterns just continue to play out in these miners as a speculation on the silver price. And, imagine we actually get a super cycle with silver miners. Maybe this is just a channel, that actually breaks out. I don't even really know how you would measure it because it's just like this is just an upward channel. And maybe we break through the channel because if silver did go to 100, that'd be a 5x, and you would expect silver miners to do a 15x in that scenario. So then we're talking about, levels of like 150 for this or something, or 100 or whatever. So, but as you can see, I mean, let's just take these off for now. If we're just looking at the moving averages, to me, this is actually a similar spot to here and here on this particular asset here in Mag Silver. Okay. So we're really talking about buying the absolute bottom here. And you actually have way much, tons of time, I think. Well, maybe not tons of time, because as you can see, these things spike very quickly. Once they start ripping, they go, and that's really the purpose. If you can see here, 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 and here. So, they essentially are a lot of people's favorite, short. So people get short squeezed out of these. But the reason I say that they're the same is, as you can see, the moving averages are upside down. Okay. So upside down and wide, upside down and wide. Now, just like they are in order and wide at the top, they can be upside down and wide at the bottom. So as you can see, something like that as well. So it's, again, like we haven't even really got to the point where these things, I mean, I don't know what like the cycle is going to look like. I think it could be something like this rip where it just goes straight through, but we're going to have to work through a lot of moving averages here. So that's kind of why I think there's more time. There is, if we look at the pattern, say from, I mean, I want to say what would be the most realistic pattern to look at here. I guess we can just look at this because, yeah, we can think about like '08. Um, it's going to chop around. I mean, we could even say like it sort of already has done a lot of the chopping, honestly. So even if we look at it like on a little bit bigger frame, so maybe it's something like this where it chops like this and then it just kind of just goes. I could see that playing out for mag. Let's take a look at Endeavor. Endeavor had a serious correction, which actually did make target and a massive reversal candle. Similar to the candle we put in here. We just put that in here. So it's a huge reversal doji. Obviously, we have put that in before and it didn't work out right there. But the target really was like this flat, it's sort of a diving board. When you dive off the diving board, you really can release very quickly off of it. The reason I say that is sort of a flat channel that we dove through and that you can really pop off from. And this is kind of a giant wedge pattern. If we could break through, it's a massive, wedge that obviously has huge upside potential. I mean, these are very small companies. This is the most under owned asset class in that I've ever seen, essentially. I mean, we're talking about completely washed out. And the thing that's cool about that is like gold's at like almost 2000. So if gold does rally, then these things are going to get bought. I mean, it's like a fact. Like you're betting, you should be leveraged long the metal through these assets. So let's also take a look at another one here. Abra Silver. Is this Abra? No, next one. Yeah, Abra Silver is a really interesting one. I mean, to me, this thing just looks ready to go. Let's just remove, the drawings there. As you can see, again, when's the time to sell? Wide. And the really good time to buy is when we're skinny on the averages. Okay. So we're actually, I think we actually are upside down in the averages on this one, but we're just skinny. We're just kind of going along the 20-week. And we did cross the bearish cross there, but yeah, I mean, this thing is still just like sitting there, just kind of waiting to be bought. This is a junior miner. They do have, a good prospects from the research I've done. I'm not going to get into that because I'm not an expert, but I do look at the charts and I do a little bit of research on that end. But as I was drawing before, we have a massive flag. This thing never really broke down like the other ones. I do think that when you look at it, when you flag it from the bottom, obviously to the top, then you have the flag, and then you have the second pole, which really is crazy. I mean, it would take you to like $6, which is like 30x from here. So we're talking about massive potential, and this could happen because if silver runs, these things are going to explode. I mean, it's gonna be nuts. So people, people have no idea, with these types of things. Now, here's another one that's like a massive cup and handle, Endeavor Mining. We have the cup. I mean, we sort of have a cup and handle. It's a better, there's a better look at it from the Canadian stock market, because I think it traded longer on there. But this thing just kind of looks like this massive accumulation range that just wants to break loose and just pop. I look at, I also look at other assets. So let me see if I can pull this up. real quick. So if you're like in a retirement or something, let's just pull up Gabelli. You can own these things, through your retirement as well. He doesn't have to be like you're buying these, with like money that you need or something. Um, these things are, in my opinion, looking really bullish as well. Um, as you can see, we just have this massive wedge here that's being played out in gold miners. Um, and it's just I mean, it's really just wanted to highlight the looks of that thing. I mean, to me, it just looks primed. It really sort of looks like almost a miniature version of down here when we were around like 2000. Um, but yeah, I mean, these have massive upside potentials for things that are like in your retirement, which is kind of cool if you have like a risk tolerance. But yeah, I think we could be looking at like a 3x, 2 to 3x in a lot of these ETFs like GDX or things like that. So yeah, let's look at gold to really kind of finalize. I mean, we can look at so many other things, but I'll keep it shorter. Um, yeah, gold bull flag, breakout, retest bull flag. And then you have um, well, I think I drew like a massive flag there, but no, you have a flag for sure that came from up here. Um, and the flag breakout target is like 3,200. A guy that I respect, Francis Hunt, his target's around 2950 or something, like right around 3,000, right before you hit it, just like you did right back here when people were maybe waiting for 2000 and never came. So you could look at like 2930, something like that. And in that scenario, obviously you have the two miners I like the best here. This is a massive cup and handle on wheat and precious metals. Um, it's just crazy. I mean, you can really look at wheat and precious metals as well as Agnico Eagle, that are just these like massive cup and handles. And this pattern, I think, was potentially from something else, but I don't know if this was the Bitcoin chart. I was comparing these to Bitcoin, because it's just a massive cup and handle. Actually, we didn't even look at Bitcoin. Yeah, let's look at Bitcoin. Um, so Bitcoin, I mean, right now it's crazy to say, but I mean, we're above all the weekly moving averages. We are skinny on the averages. It just, to me, it just looks really good. I wouldn't be surprised to come back and test the 30K range, 30 to 31.5K. Um, so yeah, I mean, Bitcoin looks really good here. There's really not too much to say. I mean, we can look at previous cycles. This is what I've done recently because this is the cycle that it looks like. I mean, it just does. Let's do bars. So, to me, this is kind of what this looks like to me. Um, and that would take us to almost 1 million. Now, if I don't adjust it at all, which I can do it again, but I think it takes us to like 600K or something. Um, yeah, around there. So, it's just funny how it's the same. It's like looks the same too. You see how that plays out like that? It flagged here and then it ran. That's actually where we're at right now. And we would run to 45. We would then crash back down to 30. We're always gonna, I think we're gonna get that 30 level again, but people are gonna have to be patient and they're gonna have to hold through like this massive run that could come pretty soon. Correct, and then bam. Now, I think that if you own metals or miners, you have to also own crypto because there's a risk that they continue to manipulate the metals and they actually let Bitcoin run as a countermeasure to gold to get people off of gold, or at least to a degree. Like gold obviously would be at like 10,000, right, without Bitcoin because there's nothing else. But now you have this digital gold that sort of takes away that shine of the physical gold. So just be careful to not be exposed at all to crypto, I think is a risk that I would not be willing to take. So none of this is financial advice. Hopefully you got something out of the video. If you did, please like, subscribe, and have a great rest of your weekend.